Hello guys, welcome back to a new video on Nativitas. Yesterday evening we had the earnings report for three very important companies. A lot more of course for other companies, but these were the three that, at least to me, were most important. Of course, what three companies are we talking about here? We're talking about Amazon, Meta and Apple. Now Amazon is up 6% in after hours, Meta's up 17% in after hours, and Apple is down 2.4% in after hours. Now we're going to analyze why is that. Of course, is it justified, at least in my opinion, and we're going to highlight the most important parts of it. Also, let me just read the financial disclaimer at the end. The information provided is for general informational purposes only and should not be considered as financial advice. While we being, well, me, Nativitas, strive to keep the information accurate and up to date, we make no representation or warranties of any kind, express or implied, about the completeness, accuracy, reliability, suitability, or availability with respect to the content provided. Any reliance you place on such information is strictly at your own risk. We are not financial advisors and the content does not constitute financial, investment, or professional advice. Before making any financial decisions, it is recommended to consult with a qualified financial professional or advisor. We do not endorse or promote any specific financial products, services, or companies. Any action you take based on the information provided is solely at your own discretion, and we shall not be liable for any loss or damages in connection with the use of our content. Investing and financial decisions involve risks, and past performance is not indicative of future results. It is important to conduct thorough research and carefully consider your own financial situation and goals before making any investment decisions. Always seek professional advice tailored to your individual circumstances. So if we look at Amazon, we see EPS and revenue are higher than expected. Advertising shows enormous growth and AWS grows in line. Now, I am invested in Google, or an Alphabet technically. For some of you may know, I don't know if you guys have watched my last video, but so I was especially very interested in the advertising growth of Amazon and of Meta, because of course that says something about its Google's advertising growth in line with the competition. And also AWS, of course, is also a bit important to Google because of Google Cloud and AWS. If we look at Amazon, and then we look at the net sales and we look at the advertising service, we see that it has a growth of 27%, which is a lot. It's a lot of growth. Absolutely tremendous growth here. And if we look at the cash flow, this is actually very good to see. We see that free cash flow has grown and become positive this year, which is very good. Last year it was negative, so it was losing money, but now it's making money. And that's very good to see, because that's the question that I always had with, what at least I always had with Amazon, is it going to be profitable in the long run? And well, as it currently shows, it is. Then if you look at these numbers, you can see that these quarterly growth numbers are just absolutely phenomenal. And if you just look at these numbers, these are quarterly growth numbers. Quarterly! That's phenomenal. Absolutely unbelievable growth. Then if you look at year on year, numbers get even crazier. Now, of course, this is from a negative number to a positive number, so you have to take this year-on-year growth with a bit of grain of salt. But it's just absolutely tremendous growth here. And it proves to me that this company, of course it was always growing, but that this company is also profitable. It can turn, well, a profit. It can make money. That's just tremendous. That's good news. That's a good sign. So the 6% after our growth, so positive reaction from the stock market, is absolutely justified. Absolutely justified. And if you look at Meta, we see an additional $50 billion announced in share buybacks. That's additional. A quarterly dividend of 50 cents per share. Per quarter, that is. That's a quarterly dividend, so it's not annual. Revenue and net income beat analyst expectations. Revenue grew with 16%, net income with 69%, and free cash flow grew with 133%. Wow! That's just crazy. For a company that's turning hundreds of billions, oh well, not hundreds of billions, but tens of billions, and 130 billion technically, each year in revenue, I mean, that's just crazy. Those are crazy numbers. And why is that? Because of restructuring. They have gotten a lot more efficient with how they utilize And thus, free cash flow and net income grew mainly because of that operational excellence, operational efficiency. Now, this does give me some concerns, however, because my only concern here would be that Meta has growth problems, the same as we're going to see later with Apple. Recent gains in net income and free cash flow are likely due to operational efficiency gains, not due to tremendous growth of revenue. Now keep in mind, revenue grew with 16%, which is still good, but net income and free cash flow just grew astronomically higher. And that's mainly due to that operational excellence, to the operational efficiency. So my only question would be, is Meta able to keep growing its bottom line so much? Its top line is still growing, but not that much. But is it able to keep this bottom line growing so quickly? That's the question. And for me, as an Alphabet investor or an owner of Alphabet stock, this is actually very interesting to see because I kind of see Alphabet where Meta was a year ago. Before it did all that operational excellence, before it laid off a lot of people, before it started utilizing its resources a lot better, a lot more efficient. I see that as where Alphabet is right now. So I'm very curious, is Alphabet going to follow the tracks of Meta this year? Which of course I wouldn't mind, because Meta's done tremendously well this year. This last year, I must say. 2023 was a great year for Meta. So my only concern with Meta is it able to keep growing its bottom line so much? But overall, this growth is just tremendous. Just tremendous growth. I mean, free cash flow grew with 133%. Like, come on, that's just tremendous. Net income grew with 69%. It shows that their operational excellence is working. Their efficiency goals are working. But what we're getting here from the restructuring is we initiated several measures to pursue greater efficiency. This, by the way, from their earnings report for the people that are interested. We have completed the data center initiative and the employee layoffs, and substantially completed the facilities consolidation initiatives. So they've almost done everything they wanted to do in operational efficiency. So that tells me there's not much more room to get more efficient. So that's why I'm having these concerns. That's why I'm concerned with, is it able to keep this growth coming? And I think that's the main question here with Meta stock. Now if you look at Apple, overall Apple beat expectations. However, sales in China are down 13%. And that was the sales in China, or in Greater China I must say, including Taiwan and Hong Kong. That was kind of the question regarding Apple stock this year, because Apple is getting a lot of competition from Huawei, for example, but also the Chinese government. The Chinese government doesn't really like American companies. So they try to make it as difficult as possible for American companies to sell stuff there. They do want American companies to come in and manufacture stuff in China, but they don't want the same companies selling stuff in their markets. Which is, yeah, whatever. You know, you can say about that whatever you want, but that's just Chinese politics for you. But those sales, well, declined with 13%, and that was kind of the question here regarding Apple. Now, then what I found very funny to read, and actually I got a bit, not really frustrated when I read it, but it's important to keep in mind that last year we had 14 weeks in the quarter. This year we had 13, Cook said. By the way, the source is in the left bottom corner of your screen right now, but when I read this, I mean, I was a bit appalled here. Like, all these other companies are doing tremendously. If you're looking at Meta, if you're looking at Amazon, if you're looking at those other companies, they're all doing very, very well. But oh no, Apple needs 14 weeks in a quarter, otherwise it cannot perform well. I understand what you're trying to say, as in, okay, we have less time so we can sell less stuff. But all these other companies are doing tremendously well. And for some reason, Apple cannot keep up just because they have 13 weeks instead of 14 weeks? Like, come on, you're a $3 trillion company. Sorry, but that's just something, when I read it, I was absolutely appalled. I cannot understand you would even say something like that. I know that he's trying to put a bit of a nuance there in the earnings report, but in my opinion, it just doesn't give a nuance. All it tells me is, okay, we cannot continue our growth. We're just going to have to find something that we can blame it on. Oh, it's the weeks. And next time it will be something else. And next time it will be something else. Oh, the Chinese government, they restricted our exports, for example, of iPhones to China. oh, the economy isn't doing so well, so we cannot sell as much luxury products like iPhones. Oh, this or that. Like, no, I mean, sometimes, and this is, to be honest, it was one of the worst ones to say. I mean, sorry, but it's just, yeah, whatever. Then if we look at the Apple quarterly net sales growth, we can see the problem is that just they're not growing. They're not growing anymore. They're Here we see tremendous growth, but here it's just it's stagnating. It's stagnating. It's not declining a lot, at least. Here it was declining a bit, but here it's at least still growing. That's very good. And when we look at the net sales by category, you start to see the problem. iPhone went up, but Mac technically went down. Already went up with what, like $45 billion, but adjusted for inflation, they're down. That adjusted for inflation is down. So iPad down tremendously, wearables down tremendously, and services up quite a bit. So we start to see that all these other segments are just not doing well. Has it plateaued? Is kind of my question. And I must say, it's starting to look like it. It's just starting to look like growth isn't there for Apple anymore. Now, on the bright side, services are up 11%. And they have to. I mean, if services didn't grow, the stock would be down tremendously because Apple has been betting on growing its service segments the last year or a couple of years now because they realize they cannot sell much more iPhones. They cannot sell a lot of more whatever iPads, Macs, MacBooks, wearables, whatever. But they know that their products aren't going to grow much more, so they have to bet on services. And at least services went up 11%. So that's good. If that didn't happen though, I mean the stock would be would be getting a good beating right now, but luckily it didn't, and that's why it only, in quotation marks I must add, dropped or declined by 2%. Now, this was the video. There was a short recap of the earnings report for the people that were interested in it, and a little bit of my opinion on the matter. But I'll see you guys in the next video, and yeah, see you guys later. Goodbye. Also, let me just read the financial disclaimer at the end. The information provided is for general informational purposes only and should not be considered as financial advice. While we being, well, me, or Nativitas, strive to keep the information accurate and up to date, we make no representation or warranties of any kind, express or implied, about the completeness, accuracy, reliability, suitability, or availability with respect to the content provided. Any reliance you place on such information strictly at your own risk. We are not financial advisors and the content does not constitute financial, investment, or professional advice. Before making any financial decisions, it is recommended to consult with a qualified financial professional or advisor. We do not endorse or promote any specific financial products, services, or companies. Any action you take based on the information provided solely at your own discretion, and we shall not be liable for any loss or damages in connection with the use of our content. Investing and financial decisions involve risks, and past performance is not indicative of future results. It is important to conduct thorough research and carefully consider your own financial situation and goals before making any investment decisions. Always seek professional advice tailored to your individual circumstances. Thank you very much for listening and your attention, and I'll see you guys, hopefully, in the next video.